So it's another perfect time we meet students of CPA. That is these students who do the CASNEB exams and other exams in the accounting world. So remember that, for example, there is a student who do ICANN for Nigeria. There's students who do, we call it what, ICPAL for Rwanda. And we have other bodies offering the accounting exams. So this type of financial reporting and advanced financial reporting, remember, it cuts are close because it's all about the use of standards. So that is what I mean. So for today, I've come in first to appreciate you for the subscriptions you have been providing. So far, we are at 7,000 subscribers. And we are expecting that soon we'll be at 15K then as we move forward. So I would like to look at a small area before maybe I mention anything else. So this small area is concerning pension plans. So pension plans, that is the area I would like to look at, and it was tested sitting in the financial reporting paper. So it's all about FR, financial reporting. So on today's session, I would like to look at pension plans. So the pension plans, So pension plans, of which you know that you can have a defined benefit plan, defined benefit plans, or we have the defined contribution plan. So the defined contribution plan. So defined benefit and defined contribution. So even in the public sector, currently they are embracing the defined benefit because it's not giving them a lot of obligations. So on the defined benefit plan, it's more efficient. And that is what the public sector has gone ahead to use. So anyway, that was not my agenda to mention maybe about the public sector or anything else. So for me to look at these pension plans, I would like to do a question, and that is the one which will be able to answer what I'm supposed to talk about here well. And this question is from April 2024. April 2024 question 4B. April 2024 question 4B. So question 4B. So for the students who have joined online, you can be able to access this past paper through a link, which I will be able to share. So under the chat, there is a link I'm attaching. So that is the link which you can be able to click, and it will just direct you to where the question is, where this question is. So for my case, I have the hard copy version of this question. I have the hard copy version of this question. So it's a question of a Mazuri benefit scheme. It's a registered retirement scheme. The trustees of the scheme extracted the following trial balance. So you are given a trial balance. So you have a trial balance where you have interest receivable, that is interest receivable, that is to the scheme, payable to members, receivable from members, current account deposits, we have the fixed deposits, accumulated fund balances, employer's contribution, offshore investments in shares, property, plant and equipment. We have government securities, investment in unquoted shares. So those are the shares for the entities which are not listed in any stock market. We have for the quoted shares, investment in quoted shares, provisions for exchange losses, interest on investments, management expenses. We have withdrawals from the scheme, pension and commutations. Additional information. Number one, Interest on investments amounting to 2.4 million was accrued as at 30th September 2023. So it has not been paid. It's an accrual. Management expenses of 450 was prepaid, so paid in advance. Required, they need a statement of changes in net assets for the year ended 30th September 2023 and a statement of net assets as at 30th September 2023. So we have statement in changes in net assets and the statement of net assets. So 6 marks, 6 marks, that is 12 marks. So this is Mazuri Benefit Scheme, a registered retirement scheme. So today, remember that if you are employed somewhere, there's that contributions you are making to a pension scheme. So if you are in a pension scheme, there's a contributions your employer is making. So they're deducted both from your side as an employee, and the employer also contributes some amount. So to a certain pension plan. So we need to look at now, how are they supposed to prepare the statement? According to this question, that is, how are they supposed to prepare the statement of changes in net assets and the statement of net assets for both as at 30th September 2023? So we can start with the first requirement. So the first requirement is the statement of changes in net assets. Statement of changes in net assets. So just a minute. So now we can do it. Statement of changes in net assets. So the statement of changes in net assets. So I have shared the question under the chart. You can be able to access it. So it's Mazuri Benefit Scheme. Mazuri Benefit what? Scheme. Mazuri Benefit Scheme. So statement of changes. So they need statement of changes in net assets. In net assets. So that is for the year. So our financial was ending 30th September 2023. 30th September 2023. Yeah. So you can have shillings there in millions, then shillings in millions here. So remember that under the pension scheme, there's contributions which are made. So there are contributions which are done what? Made. So which I've said, the contributions will be made by your employer and yourself. So there's that deductions done. So from what you are supposed to pay, and at the same time, your employer will pay for you some amount. So that is what I will start with. So we talk about members' contribution. So the members' contribution. So looking at my question, what is members' contribution? Members' contribution, looking at my question, I have a 250.2 million. So I will say a 250.2. So that was the members' contribution. Then we have the employer contribution. Employer's contribution. So the employer's contribution. So what your employer is contributing, that is 630.6 million. 630.6 million. So up to that point, we have what? Total contributions. So we'll be having total contributions. So the total contributions will be, So that is yourself 250 as an employee. So that is the members' contribution in that scheme. So that is 250.2 plus 630.6. So we have a total of 880.8 as total contribution. Then now we need to raise. So there's various items we raise. Right now, what the scheme was paying as a pension, what it was paying as a pension. So right now I can be able to see there's that pensions and the commutations the scheme was paying. So pensions and what? Commutations. So pensions and commutations. So that is 9. So that is what the scheme is paying to its members, pension and commutations. Another thing is all about there was withdrawals. Other than what the scheme is paying, there is some withdrawals which are done. Withdrawals from the scheme. So we have some withdrawals from the scheme. Withdrawals from the scheme. So the withdrawals from the scheme. So the withdrawals from the scheme, according to the question, I can see there is 15. So that is 15. So this one will reduce your total contributions. So these two will reduce your total contributions. So if we deduct there, so that we get net addition by members. What the scheme is remaining with so far. So if we deduct 209 minus 15, so I will be able to get 6. That is 656.8. 656.8. 656.8. Then now, other than this aspect of contributions and what going out through the withdrawals and pensions and commutations the pension scheme is paying, they might have went ahead to make some investments. So you have to look at when this pension scheme made a certain investment, what is the return you got? So that the return will be an addition. So the return on investment. So the next thing we look at is return on investment. So the return on investment. So the return on investment here. So when this pension scheme went ahead to make investments, I can see there's interest on investment. So there's an interest on investment. We have interest on investment. So that interest on investment is 640. So that is 640. But if you can look at the additional information, there was an interest on investment which had not yet been paid by the end of the year. That is an accrual. So that is additional information. Number one, that interest on investment amounting to 24.5 was accrued as at 30th September 2023. So meaning that I have to add the accrued, the one which had not been paid, the one which had not yet been paid. So 640 plus 24.5. So the total interest on investment is 664. 664.5. So that is the return on investment. So based on the investment the scheme made, he received an interest on investment of, he's supposed to receive this 664.5. That is like an income to the scheme. That is like an income to the scheme. That is an income to the scheme. Then after that, we can be able to raise what? Expenses. Raise expenses. So say other expenses. So other expenses. So we can deduct other expenses. So based on the trial balance provided there, I can be able to see the expenses, like management expenses, like the management expenses. So we have the management expenses. Management expenses. So management expenses, that is the trial balance, it was 7,000. But in addition, number 2, there was a management expense which was prepaid. This is a management expense which was prepaid. So which was prepaid. So management expense is 7. So that is 7 minus. So 7 minus the prepaid. There was a prepaid expense of 450,000. So being shillings in millions, I would say minus 0. That is minus 0. What? Because that is for 50,000. If we divide with a million, you will be able to record it at 0.45. 0.45. So if we say 7 minus 0.45, so that is 6.55. So we have 6.55. So remember that this one will be able to deduct, so that change in net assets. Net change in what? Change in net assets. So net change in net assets. So 664.5 minus answer, that is 657. 657 point. 657 point what? So that is 657.95. 0.95. But so we had not added some value here, so we are supposed to do this. So remember that 656.8 plus this return on investment, and deduct that one. So that one was the challenge there. So 656.8 plus 6 plus the return, that is 664.5 minus 6.55. So this is 1314. Yes, 1314.75. So that is now the net change in net assets. Then after that, we can be able to add something which was accumulated. So in this trial balance, there was an opening accumulated fund. So add open, that is the opening balance for the accumulated fund. So opening accumulated fund. So you add opening accumulated fund. So remember that our financial year was ending 30th September 2023. So meaning that the opening accumulated fund as at the start of the year, that is 1st October 2022. 1st October 2022. So under the accumulated fund, the opening balance was, so the opening balance was 7640. So that is 7640. So that is the one I will be able to add to the 1314.775, which is my net change in net assets. So if I add 7640 there, if I add 7640, I would be able to get 8954.75. 8954.75. And that is now the net assets. The net assets, the value of the net asset, that is as at 30th September 2023. As at 30th September 2023. So it's very simple. But by first looking at the members' contribution, then employer's contribution, you get your total contributions, deduct your pensions and commutation, and any withdrawals from the scheme. Then check on the return on investment, any return which was from the investment, which is supposed to be added to the net additions by the members. Then after that, you deduct any expenses and add your accumulated what? Accumulated funds, so that at the end, you would be able to get your net assets as at the end of the year. So this one was having 6 marks also. So this is 6 marks. So they were marking entries 1, 2, 3, 4. That is 5, 6. So we have 7. So 7. So out of the 7, they needed any 6. So any 6, they multiply by 1, you get your 6. 6 marks. So out of the 7, 1, 2, 3, 4, 5, 6, 7. Out of the 7, they needed any 6 correct entries. So this is how you are supposed to prepare the statement of changes in net assets for the pension plans. So the next requirement was the preparations of the statement of. So remember that this is the statement of changes in net assets. Now the next one we will do is now the statement of net assets, not the changes. Now the statement of net assets. So that one is the next requirement by the examiner. The statement of, so I can be able to clear just this one. Statement of what? Statement of net assets. Now the statement of net assets as at. How you are supposed to prepare the statement of net assets as at 30th September 2023. As at 30th September 2020. So statement of net assets. So here I would have shillings in what? Shillings in millions. So here it's just recording your assets which are present. Just listing of assets. So you start with assets. Nothing much. So from the trial balance, I can see we have things like property, plant, and equipment. Property, plant, and what? Property, plant, and equipment. So these things like property, plant, and equipment. So the property, plant, and equipment is 800 million. After that, we have they made investment in quoted shares. Remember that quoted shares. So investment in quoted shares at 3,000. So investment which is made on unquoted shares. Investment in the unquoted what? Unquoted shares. Another asset is the investment in government securities. These are bonds and what? Bonds and bills. So government securities. So they made investment in government securities. That is 590. After investment in government securities, they made investment in offshore. So offshore investments. So they made foreign investments. So offshore investments. So the offshore investments, according to the question, we have the offshore investments. So the offshore investments. Lakini there under the offshore investments, I'm supposed to carry out one adjustment because there is somewhere you are given provisions for exchange losses. Huh? Provision for exchange losses. Are you seeing this? So provision for exchange losses. So remember that when they were making investment in that is offshore investment in shares. So when they made offshore investment in shares, so remember they are supposed to receive some amount from that investment they have made in foreign countries. But now these are provisions for exchange losses. So in the process of receiving our dues based on that investment, we might make a loss. We might make a loss due to the exchange factors. So due to that, there was a provision which was made to cater for the losses which can be made. So meaning that your offshore investment must be reduced with the provisions which are made. So the offshore investment is 1200, so you reduce with the provision of 160. So that one will be 1. That is 10 what? 1040. This one will be 1040. Then after that, there is other assets like now fixed deposits. There's these deposits which are done by the members, which are fixed. So fixed deposits, that is 260. After fixed deposits, we have current deposits. And this one are assets. So we have the current deposits. So current deposits is 32.2 million. After that, we have the receivables from members. Receivables from members. So the receivables from members, that is 635.6. 635.6. They receive an interest which they are supposed to receive, the interest receivable. So the interest receivable. So the interest receivable, that is 80. Then there's that, remember, accrued interest. Accrued interest is an asset. Accrued interest. So the accrued interest, which also they are supposed to receive, that is from additional information number 1, the 24.5. The 24.5. After the accrued interest, so there is something which can reduce your assets, which are supposed to appear here. There's some values which will reduce your what? Your assets. Like now what they are supposed to pay to members. So payable to members. So payable to what? Members. What you are paying to members must reduce your values of the assets. So payable to members is 8 million. So what they are supposed to pay to members, that one you do what? You deduct. Then remember that even the prepaid expenses is an asset. Prepaid management what? Management expenses according to additional information number 2. The 0.45 must appear there. So up to this point, we have the net assets. Net assets as at 30th September. So net assets. So we can talk about net assets. 30th September 2023. 30th September. So we can look at the total for this one. So 800 plus 5500 plus 590 plus 1040 plus 260 plus 32.2 plus 635.6 plus 80 plus 24.5 minus 8, which is payable to members, plus 0.45. That is 89.54, which is this one. 89.54. 89.54 point what? 0.75. So you can see it's the same as the value of the net assets we got from the statement of changes in net assets. So I can balance with this one. It's not a must, you could have done that. Even if you could have stopped at this point, I'm done with this question. If you could have stopped at this point, net assets as at 30th September 2023, you could have had everything. But I can balance with what? The one I've mentioned. So the accumulated fund and what? Accumulated fund. So remember that the accumulated fund was a accumulated fund. And remember the net assets, net changes in net assets, we got which value? Net changes in net assets. Net changes in net assets was 1314.75. So that is how we got what? The 8954.75. So that is how you were supposed to do this question for FR, April 2024. Question what? Question 4B. Question 4B. Because already we did question, this one was question 4B. What about question 4A? So that I can be able to say that I'm done with this question. Question 4A. What they were asking about question 4A, it's a theory question. So question 4A, so because for this one already we have 12 marks. We did the part of, remember we have done question 4B, Roman 1 and 2. I showed you on how they were marking Roman 1, 6 marks. I can even show you again how they were marking for this 4B. They just mark entries. NFR equation, they mark entries. They mark entries. You see that? So these ones are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So they needed any 6 to score everything for you to get your 6 marks. So now we have 12 entries. You don't have to get all of them. They need any 6 correct entries. They multiply by 1. So meaning that for each correct entry, you are getting 1 mark, 1 mark, 1 mark. So they are looking for any 6 you have scored, any 6 which are correct, so that you can be able to have your 6 marks. You can be able to have your 6 marks. So I have decided that we do question 4A of the same. We look at question 4A. So for question 4A, it's a theory question. It's a theory question. So in this question, they were mentioning that explain when an entity is required to recognize an asset. So anyway, in context of IPSAS 23, in context of IPSAS what? 23, revenue from non-exchange transactions. Revenue from non-exchange transactions, that is taxes and transfers. So IPSAS 23. IPSAS 23, concerning IPSAS 23. Revenue from non-exchange transactions. Non-exchange transactions, those are taxes and transfers. Explain when an entity is required to recognize an asset in. When an entity is required to recognize an asset in respect of taxes. When an entity is required to recognize an asset in respect of taxes. And citing 2 suitable examples, explain the term transfer. So this one. So this one you can say Explain when an entity is required to recognize an asset in respect of taxes. So the first thing is when the post-taxable events occur. When the post-taxable events occur. When the post-taxable events occur. Another point you can say, when the asset recognition criteria is met. When the asset recognition criteria that is criteria is meant. Explain the term transfer. So explain the term transfer. So this one is Roman, that is of the future economic benefits or service potential from non-exchange transactions. From non-exchange what? Transactions. From the non-exchange transactions other than what? Other than taxes. So transfers are inflows of the future economic benefits or service potential from non-exchange transactions other than taxes. So they needed example. Transfers include grants. So includes grants, debt forgiveness. So debt forgiveness, like now the waivers, debt forgiveness, fines. We have fines. We have the bequests. We have the gifts. We have the donations. And the goods and services in kind. And the goods and what? And the services in kind. So remember that this is 4 marks. That is 4 marks. So the terms they were looking at right now here, let me just enlighten you on how you are supposed to answer right now the theory questions. Right now, here they were talking about that you do what? You citing 2 switchable examples explain the term transfer. So already we have explained the term transfer. But right now, we have said it's a transfer. That is transfer of what? Transfer are inflows of future economic, that is major, future economic benefits up to this point, or service potential in transactions other than taxes. Then now here we have examples. Here we have examples. We have the example. So what I've underlined is major in getting these 4 marks in the explanation of the word transfer. But generally you have understood what is transfer. So that is it for this April 2024 question 4B. So it was based on IPSAS 23 and also it was based on the pension plans. So what I can say is that when we meet next time, guys, when I will be coming in for another live session, I think it's better I solve. There are sitting question for group accounting. That is question 3. April 2024 question 3. But maybe if you will not be lucky that I will not be able to do it in this live session, the Zoom classes I do. And obviously I know I will be able to do it. So the Zoom classes I do. So these are more online. So they are online classes which we do from 8 p.m. So FR is on Wednesday and a Thursday. FR is on Wednesday and Thursday, 8 p.m. Kenyan time to 10 p.m. Then there's advanced financial reporting also, FR. That is Monday. Like now today we have, other than FR and FR, I also do LM, Leadership and Management. I do auditing. I do FA. So I also do those 3 units. So LM, auditing, and financial accounting. So, but these one are the major ones. These are the major ones beside those 3 areas. So you can join. You can be able, if you want to join, you can use my number. This is my official number for the classes. So anytime you can be able to call me. We agree on the way forward. So that is my contact. This is my contact. So if you want to join the online classes during the evening hours, you can WhatsApp me or you can call. We can be able to agree on the way forward. So I've said when we will be meeting next time, either maybe if it can be under the Zoom classes, we can do great work. Or you do what? You wait until I do maybe some live sessions under YouTube. The major work is done in the Zoom. The major work is done in the Zoom classes. So here I always come to do a general overview of some areas maybe which need some attention to the students who are my subscribers from YouTube. Because like now this topic for pension plans, it has never been tested. I have never seen a question for pension plans since I started not even teaching, since I was a student. That is in the year 2015 there, 2016. So it's a very new area. So at least we have done a question for pension plans, and it will be on record that in the coming days, students can be able to use it. So take your time and join my online classes so that we can be able to do the better work for you to do your exams coming August. So thank you. See you next time when I will be doing group accounting. That is maybe within the week or maybe over the weekend. Use the number well if you want to join my online classes. And there are some students who come in who have not subscribed. Make sure that you subscribe to my YouTube channel. Subscription is free. And also open the notification bell so that when I'm doing an online class, that is through YouTube. When I'm doing a live session, I can say that you can be notified. So asante sana.